Hi, good evening, everyone. This is Lloyd speaking. Yep. So this week let's have a chat about the US breakout. Yeah. So I think 2 weeks back was talking about the London breakout. By the way, I'm still using the same indicator, no difference. It's still the channel breakout that you should be able to find on the link. Yeah. So it's the same thing as always, and in that link you should be able to find the results that are tabulated. Yeah. So what happens now is that between the London session and the London breakout and the US breakout, something to clarify before I go to that is that I'm not actually trading. I'm not actually trading the actual session breakouts. Yeah. So what happens is that I realize there's some confusion when I say London breakout and US breakout is that what I'm trading is the breakout of the Asian session. So there must be some sort of consolidation during the Asian session, and then during the London itself, when it breaks, that's when we jump to the trade. So same thing for today. What happens is that when I meant the US session breakout is that there must be some consolidation on during the London session, and then we trade the breakout during the US session. Yeah. So realize that there might be some confusion there. So compared to last week, I actually put in a few more parameters to try and tighten it and see if I get better results. Yeah. So this, in essence, not an apple-to-apple comparison for the US and the London session breakout. Yeah. So what happens for the US today? What I'm presenting is that instead of trading all sorts of breakouts, the requirement I put in, let me share the screens. Where is it? Yeah. So the requirement I put in is that the range must be about 35 pips and below. Yeah. So I wanted to actually go for 20 pips, but it seems that there isn't much of a setup. Then, especially for the S&P 500, the range will be 150 pips. And then instead of the stop loss, previously I put it at the middle line of the channel. So for the US session, what I tested was the stop loss is at either the candle high or low. Yeah, so it should be nearer compared to the London breakout, the way that I actually tested it. Yeah, so all in all, unfortunately, is that I still don't get a fantastic results. Yeah, so this is actually based on 6 months of testing. Yeah, the number of trades, losses, and then you can look at the total returns compared to the losses. The return is actually lower than the losses. So it is still not a viable way of trading as I've envisioned. Yeah. So in both projects, I would say the London and the US breakup, I have failed. Yeah. So it isn't even near to my baseline. Yeah. My baseline is actually to have a break even. So whenever something I tested, if there's a break even, then I would deem that yes, there are further chances that I can develop the way how I trade it. So this is not even near the baseline, so it's hard for me to actually further develop it. But as always, like what I mentioned, is that the way I learn trading, the way I learn the market, is not via fundamentals or any other thing. It's actually via backtesting and actual chart reading. Yeah. Okay. Correction. It's not chart reading, but chart observation. Yeah. So what I actually observed this time around is that I should not go too much into how I test, since I doubt anybody will actually take it up, since that I don't have a profitable results compared to the past indicators which I presented. But what I observed during the London and US breakout, in the way that I actually uh, envisioned and traded it, is that first of all, the time frame that I have set in on choosing might be wrong in the very first place. Yeah, because I tested on an hourly time frame. So what it means simply is that for an hourly time frame within the day to go to 5:1 is actually quite hard. So that might be the first reason why I don't get a fantastic returns. And of course, second thing is that there are a lot of variables that I can play about to try to improve the results. So one of the variable is that, especially for today, the US session, is that I only considered the London consolidation. That means I did not take into account the Asian consolidation. So you can see that's why that's so this is the Asian session starts from here and ends about here. So from here onwards, this block is actually more of the London session, Asian, and then here onwards is the active will be more of the US session. Yeah. So The results might or might not improve if I take into account the Asian consolidation, which I did not. Sincerely speaking, I don't know whether I should or not. Yeah, but that is one variable that we can introduce. Second thing, of course, like I mentioned, is a time frame variable. Yeah, for 1 hour time frame, any price that you jump into and wanting to get about 3:1, 5:1 within the day, sincerely speaking, is quite tough. Yeah, that definitely doesn't happen every day. Yeah, I'm using the S&P chart as an example. Yeah, but I think it's applicable across any currencies. Now, the first thing that I actually notice is that there are times that the currency does travel, especially for if you pick something as I would say idiot proof as XMP. Yeah, so the moment you pick XMP, the buyers will actually naturally be long. So this is a long-term uptrend market. Yeah, 20 years back to now, if you look at the monthly chart, the S&P is uptrend market. So one way to filter out, I would say, if you concentrate on just one particular market, just go for long. You should be right more than half the time, naturally. So the other thing which I observe, and this is the interesting thing about backtesting indicators, is that you might not come up with a viable system, but the way that you play the indicator, it will naturally lead you to some observation which I'm going to share with you. So first thing is the time frame. So let's go to time frame itself. Yeah. So one thing that I observe is that whenever price break, a better entry indicator would almost definitely be a retest. Yeah, the break itself might not be a fantastic candle to enter. Yeah, because it might by itself it might not be a good confirmation, but a retest uh, is a better visual confirmation, I would say. Yeah. So for example, you can see that price break retest the high of the channel. I'm not talking about the middle line. I'm simply just talking about the high of the channel. Market entry, stop loss at the low of the candle. Uh, we should be able to target at least 2:1 with a more than 50% win rate. Yeah, again, this is something which I observed. I have not actually tested, but I'm opening up the floor to any of you that if you're interested in a particular session breakout, especially for the US session, is that for people who are working, the US session might have a greater interest for you. So simply a retest of the channel itself might prove to be a better entry. Of course, throughout the US session, I understand that for the Asian guys, us, there needs to be a cut-off time because we are eventually will be sleeping. Yeah, simple as that. Yeah. And the second mistake that I went about planning my system is that let's go back to the hourly time frame. So is that I don't have a fixed take profit. Yeah. Unless price hit 5:1, then I'll consider that yeah, it is a ultimate winning entry. I'll just close the trade. Yeah. So what happened during my testing phase is that most of the time price break, let's say 1250, you can see that 1250 pips is actually 125. Price broke, I enter. Unless price hit 5:1, I don't actually close the trade, at least in my testing. So what happens most of the time is that price did travel. Since I'm envisioning that I'm using a trailing stop loss system, wherever price traveled to the next R, the next reward, what happens is that I envision my stop loss will be below and my next take profit for the very next day is actually a next R. Yeah. So what happens most of the time is that price actually retrace and hit the level below, which will either be a small 1R returns or a break-even trade, which is not uh, not what I hope to have at all. Yeah, so I think that the way that I tested was right off the bat was wrong. If I had gone on with a fixed take profit, I might have fared better, in all honesty. Yeah, but anyway, what's done is done. Let's talk about what I think can be improved. I think that's more important for everyone. Yeah, so again, taking the S&P market as an example, I mean that's the I would say the representation of the US market. Yeah. So again, I hope for a tight consolidation during the London. That means not much buyer, not much seller. Then when the US session open, there will be much higher volume. Volume. That's what I envision. Truthfully, is that true or not? I don't know. Yeah, but I mean, as in all hypothesis is out for testing. So anything that is about below 150 pips, then I'll be interested in that particular channel. Anything that's above 150 pips, I might think that there's already too much movement during the London session. I'm not interested in trading it. Yeah, so that's my first hypothesis. So again, 1250, let's go with the idea that we'll be trading a break and retest. So if there's no retest, let's not look at the trades. Yeah. So again, you can see that price broke the channel, retested. Okay, but unfortunately, it actually went below a channel. So again, I'll put this up to the floor, is that whether you all think that if it went below the channel high, would it be still counted as a viable entry? I will tighten the requirement. For now, let's talk about it tested the channel, but the body is still above. Yeah, so this kind of candle I wouldn't count. So let's see if I can find one example. Yep, so this will be, so you can see that price actually broke. I'll talk about short candle. Yeah, there's something that we should notice about shorting. Again, it's up for testing. Yeah, so this is the kind of candle which I'll be interested in particularly trading. So this is 17575. Yeah, so it's slightly above 150 pips. Yeah, so it's 157. Let's think about we trade this candle, enter. So you can see that price. What happened is that price actually broke the channel, retested, and then it went off. Yeah. So this is the kind of retest that I'm looking forward to trade. Yeah, even in my daily trading, I do like to trade break and retest. I'm quite fond of it. So price enter, stop loss below the breakout. You can see that price easily go up to 3R at the end of the day. Now the dotted line on my screen is actually the end of the day, server time 000. That means Singapore time is actually 5 a.m. Yeah. So if I aim for a respectable 2R or even higher reward 3R, let's go for 3R this time around. Yeah. So it will hit. Yeah. So price is within the range that I would like to trade. So let's say an example. This is 2345. Not really interested. Yeah, this is 963. So this is something I'm definitely interested. So what happens here is you can see that price broke. Yeah. Let's not have some too strict a definition. Retested. This candle will actually be a retest. Yeah, a one candle retest. We'll still get stop out. Next, so be it. So I don't nothing here. So this will be a broke. This will be a break. Yeah. So now this again something up for challenge. It didn't really quite retest the channel, but essentially this is the kind of movement that I'm waiting for. So you can see it's always this kind of movement that I'm waiting for. So if we get it in and then stop loss below, price will hit the 2R. Still 2R, 3R, something up for I would say anything that's up for grab within this range would be good enough. Again, nothing I can see over here. Break, retest. Yeah, so this kind of retest that I would love to trade. So this time around, I have a stop loss. Nah, so be it. Again, 850 pips. So this is something, sorry, 85 pips. Yeah, so you can see same kind of movement. Let me get rid of that. Break, retest, channel high. If we enter, stop loss below, price easily hit 2R. Even up to the next day, we can possibly hit 3R, which is 2 days later. Yeah, so this is just a slight modification to how I envisioned how to improve the trading. Yeah, so you can see same kind of movement, price broke, retest candle, and then it takes off, right? There's no retest, not interested. Channel too big is 320 pips. We are no longer interested. 1525. Yeah, so this again break retest, but you hit our stop loss. Nothing here. This is 120 pips. Yeah, but the moment you see this kind of candle whereby it engulfs the entire channel for long, essentially it should tell you that it's a news day. Yeah, don't really recommend you to trade a news candle. So let's see if we can find. again, a kind of like news candle where you can see it engulfs the entire channel. Yeah. So you can see that this is about 100 pips, 98. Yeah. So again, price broke, huge retest. Even if you trade it, let's see, sorry, the stop loss should be at below. Hits throughout the very next day. Yeah. So again, this idea that I have, break and retest, is not a out of the world idea. It's a very common trading technique. Yeah, break and retest or whichever levels that you define. Yeah. So again, my point being that it seems that a pure break of a channel does not serve me well in the way that I look at London breakout or US breakout. Yeah. Observation wise, I think a break and retest of a channel has a better chance of making the system succeed. Now, the next thing I'm going to share with you is that I, as this is only applicable to a US S&P site. Yeah, the FTSE I didn't make such an observation is that first of all, I don't encourage new traders to short the FTSE. No, to short the S&P. Yeah, since it's a long-term uptrend market. But one observation that I make is that, let's say price, if it actually did have a break of the lower channel, yeah, one simple observation that I make is that if the channel, let's say this channel is 750 pips, again, I'll go with the condition that I'm only interested in about 150 pips channel, right? So anything that is too big, really not interested in trading because price would have moved. If the break candle itself is actually bigger than the channel, so you can see in my crosshair about 748, 775 pips there above. Yeah. If the breakout candle itself, if it's bigger than the channel, that means the London's movement, it has a better chance which leads to a breakdown. Yeah, so this one, the first one, the very first example I picked, I don't know why it happens to me. Most of the time, the first example that I pick is not a very good example. Yeah. So this results in a loss. Let's find some good one. So this one is 400 pips, not interested. Yeah, this one is about 112 pips, the channel itself. And if you measure the candle, it's about 228, 228 round, 230 pips. Yeah, so it's bigger than the channel itself. If you enter, you can see that price did eventually lead to a breakdown. So this is the first example. That's the observation. The 100 pips candle, so this one will be a stop loss. And I mean, this candle is definitely bigger than the channel. Yeah, so it's not a winner. Nope. So again, this candle is bigger than the channel. This is not a winner. Now have a look at this. This is about 525. So if you trade this, you see a price still hits 2R. Yeah, so we have about 2 winners, 2 losses here, thereabouts. Currently the winners will still be leading. I'm just only, let's look at particular short trades only that is bigger than the channel. Doesn't happen often. 2000 pips, they're not interested. 1525 is bigger, not interested. There. This one's about 87 pips. So if I measure this candle, that is bigger than the channel because it's about 112 pips. So if you traded this, stop loss. Again, this actually traveled all the way to 5R. Yeah, let's do one more example. 1002, but this candle is not big enough. 94 pips, forget it. This one is about 100 pips channel. For this candle, still not bigger than the channel. It's only about 60 pips. Definitely smaller candles. No. It's about 950 pips. Let's have a look about this candle. Yeah, so this candle will actually be a viable trading candle. It will actually hit my stop loss first before price travel down. But personally, because this is due to observation, I think we need a larger sample size to determine whether this is tradable. But from pure observation, I think from a short trade, this is something which I observe is that if the consolidation itself is tight, which I defined by about 150 pips during the London sessions, and the breakdown candle is huge, which consumes the entire channel, there's a higher likely chance that the breakdown will work. So if anyone is interested in trading, take it out, backtest it, get about sample size of 50 to 100 trades. You should have a pretty good idea whether this worked out or not. Yeah. So I'll be back in 2 weeks time. Let's see if 2 weeks later I can reverse my losing streak and see if I can churn out a indicator which coupled with the correct risk management system, hopefully it might be profitable. Yeah. So now, my record is not that bad. 1, 2, 3, 4, 5, 5 indicators that I shared. All 5s are profitable except the breakout channel. Yeah. So all in all, I'm still happy with what I've shared in this channel. So I'll see you in 2 weeks time. Goodbye.